Your money is being reset. AI and Bitcoin just broke the system. The world is quietly collapsing. The formula that built wealth for the past 40 years, the same one your parents trusted, is now broken. Bonds, pensions, real estate, mutual funds, they all relied on the assumption that interest rates will eventually rise. But now, that interest is gone. For the first time in history, we are living in a world where saving money actually costs you money. During the early 1980s recession, Paul Volcker crushed inflation by raising rates to nearly 20%. Back then, just $300,000 could earn you $50,000 a year in interest, enough to retire. But that world is gone now. Today, to earn the same interest, you will need $10 million. The system that powered the world no longer works, like an old code that stopped running. But most people still don't realize it, because admitting it means accepting that everything they've learned about money is obsolete. The investment theories from school, the financial advice in books, and what your parents, teacher, society taught you, they all belong to another world. So, people keep waiting for rates to rise again, for the market to go back to normal, but here's the truth, that world is never coming back. A new game has already begun, and its name is resets. Today, we are going to look at how money is moving in this reset world, and who's building the next wave of wealth. This isn't just economics, it's the story of who gets rich and who gets left behind over the next decade. You will find the Trading 101 link in the description and pinned comment below. There, you will see how the world is shifting and how to reset your investment strategy for this new era. Are you ready? Then let's begin. In 1981, inflation in the US soared past 14% and the country was drowning in fear. That's when Federal Reserve Chairman Paul Volcker stepped in. He did the unthinkable. He raised interest rate to extreme levels. 10-year Treasury yields hit 15%. The result? Anyone who bought bonds back then saw their wealth multiply. It wasn't just an investment strategy, it was a 40 years cheat code for wealth. Whenever a crisis hits, bond prices went up. When rates fell, their returns exploded. From governments to pension funds, from corporations to individuals, everyone joined the same system. Put your money in and interest will do the work. It felt like an unshakable truth. But that unshakable truth collapsed in 2020. The world slipped into negative interest rates. 17 trillion euros worth of bonds were paying negative yields, meaning holders had to pay money just to keep them. In Japan, retirees who spent their lives saving found themselves paying fees just to keep money in the bank. It wasn't a market decision, it was an illusion engineered by central banks. Then, inflation came roaring back. Bondholders realized the truth. Their safe assets were actually ticking time bombs. Today, the global bond market is worth over $300 trillion, and most of it is now trapped. Governments can't handle real interest rates anymore, and bondholders are slowly melting away. Morgan calls this the debasement trade. As currencies lose value, investors are dumping dollars and bonds, and turning to assets that can't be printed, gold and Bitcoin. This isn't just a rotation, it's a full migration of the global monetary system. If you still think this is just a temporary market phase, you might already be too late. What is happening now isn't a cycle, it is a structural collapse. And when a structure collapses, the first thing that disappears is safety. Right now, we are standing at the crossroads of two massive cycles. One is the collapse of the financial system. The other, the explosion of technological revolution. This isn't just market turbulence, it's a rewrite of how the entire world operates. For the past 80 years, money revolved around bonds. Interest rates, treasuries, and bank yields, they were the foundation of wealth. But now, that foundation has cracked, and something entirely new has taken its place: Bitcoin and AI. Bitcoin is humanity's first truly scarce digital asset. It can't be printed, seized, or inflated. AI, on the other hand, produces limitless productivity. It never stops, never sleeps, and works faster than any human can comprehend. One represents absolute scarcity, the other, infinite creation. When these two collide, they create a brand new engine of wealth. This isn't just about technology, it's about the architecture of a new economy. Smart money is already designing a new kind of fixed income market built on this system. In the past, that role belonged to government bonds. Now, it is being rebuilt on Bitcoin. Covered calls, staking protocols, derivatives, even corporate balance sheets, they are all being redesigned around Bitcoin. This isn't speculation, it is reconstruction. If the last 40 years were built on interest, the next 40 will be built on scarcity and algorithms. Today, the market revolves around a single idea: earn yield or disappear. Bitcoin is no longer just digital gold, it is being rebuilt as an asset that actually generates interest. Global institutions are jumping into this new game. Leading the charge is BlackRock. They recently announced a Bitcoin Premium Income ETF. And the name says it all. They are not just holding Bitcoin, they are using it to create yield through covert called strategies. In simple terms, they are earning income while holding Bitcoin by selling options on it. It looks like a bond, but it isn't. It is a test model for the future of money. And this is just the beginning. On-chain, the same idea is evolving much faster. DeFi platforms offering 5% yield on wrapped Bitcoin, Layer 2 networks that automatically compound rewards, and hybrid models that merge staking with custody services. It all looks chaotic now, but this chaos is the birth of innovation. In the end, only one will win. Whoever builds the safest, most reliable yield structure. Whether that's an ETF, a DeFi protocol, or a wallet doesn't matter. The moment big exchanges like Coinbase or Binance roll out one-click staking, this market will explode. What is happening isn't just a product race, it's a war to turn Bitcoin into a cash flow asset. In the past, bonds generated the world's interest. Now, that role belongs to Bitcoin. So, here's the takeaway. If Bitcoin ever feels boring, it's because the world itself has slowed down. Lately, some reports have been saying, crypto today is where the internet was in 1996. Sounds convincing, right? But it's completely wrong. In 1996, did the internet have 100 million users? Were there ETFs? Did government invest in internet companies? Nothing like that existed. But today, it's a whole different story. Bitcoin ETFs alone are holding billions of dollars. Central banks and pension funds are stepping directly into the markets. Universities like Harvard, Yale, and Brown, they started buying Bitcoin back in 2017. And major financial giants like JP Morgan, BlackRock, Fidelity, they are now creating Bitcoin-based products for their clients. So, no, this isn't 1996. In 2001, back then, the internet was just about to enter everyday life. AOL, MSN, YouTube, email, all exploded after that point. And right now, Bitcoin stands in the same position. There's only one difference: speed. It took the internet 15 years to go mainstream, but crypto won't even need 5. We are past the someday stage. It is already happening, right now. The only question left is, how fast can you adapt? And trust me, that speed will be a lot faster than you think. The real problem today isn't that assets are expensive. It is that most people don't realize the dollar itself is melting. We still measure everything in dollars. How much our assets are worth, how much profits we've made, all in dollar terms. But if that dollar keeps losing value every year, what does that number even mean? This isn't just inflation, it's debasement. The more money gets printed, the less rare it becomes, and the quieter your wealth melts away. That's why even when markets rally, people don't feel richer, because the measuring stick itself is rotten. It's time to change the standard. We need to measure wealth not in paper, but in real assets. Bitcoin, gold, commodities, or anything that can't be printed. In other words, only what's finite truly holds value. The new survival formula is simple. First, change your base currency. The dollar is no longer the yardstick. Second, combine scarcity with yield. Build income structure backed by hard assets like Bitcoin and gold. Third, move before consensus. Because once everyone knows, it's already too late. The ones who understand these rules now will own the next decade of wealth. We've come to a crossroads. You have two paths ahead. The first, staying inside the old system, trusting dollars, bonds, and pensions, the formulas of the past, slowly watching value melt away year after year. Most people will choose this path because it feels safe, familiar. But safety is an illusion, one that disappears the moment the system breaks. The second path is harder, but real. It means switching to a new operating system, building your own income structures, and stepping into the world where scarcity meets productivity. This shift isn't just about what to buy, it's about how wealth works. Ask yourself, when were the rules you follow created? And are they still valid today? You will soon realize most of them belong to another era. This isn't an investment story, it's a survival story. In the new era, becoming wealthy isn't about earning more, it's about understanding the system before anyone else. The dollar era is over. Now begins the age of system builders. And you can start today with Trading 101. Explore the new structures and strategies built for this next chapter. The world has already changed. Now, it's up to you.